you're going to be given the general parameters, and you'll be given the final answer in the form of a simplified cash flow statement covering several years. The final answer is going to contain the actual values. You're going to have to replace those values with the formulas more accurately. You're going to have to build a moderately complex sheet that shows step by step how to get from the parameters that you're given to the actual answers that you're also given. So basically, you're given beginning and end, but you have to build in middle, and you have to recreate end based on beginning. Now, just so you know what things will look like when they end, you can see right here you've got a fairly simple cash flow statement that your goal is to create. These are the actual answers that you'll get. So in other words, this is your current period, and then you're projecting years 1 through 4. You'll be building that cash flow statement using a number of parameters. The first set of parameters are some general ones. You've got a discount rate for your discounted cash flow. You've got a benefit overhead rate. In other words, if my salary is $100,000, how much more do you add on for my benefits? There's a few different types of services that they provide, and these are the volume. This is the volume of services that they provide, and here's the relative value unit. So we'll talk a little bit more about that in a second. You've got some annual increases in volumes. Your payments per RVU, in other words, your reimbursements are going to change over time. You can see sometimes not always for the better. Your reimbursements might go down. Your salary levels might also change over time. And lastly, you've got some overhead that you've got to pay, and that might change over time as well. Some of the other parameters, you've got your positions, or this is your staffs. Here's the annual salary associated with each staff person. And here's the fixed FTEs, more about that in a moment. And finally, you have productivity factors. In other words, for each of your 4 different types of services, how many minutes does each one of your staff people spend with that? So for example, your front desk clerk is going to spend on average 10 minutes for every new patient visit, only 8 minutes right there for routine visits, only 5 minutes for simple visits, and so forth. So you get the idea. So this shows you how much staff time goes into each type of service. This project, the steps behind this project are fairly simple. Review everything you've got in front of you, and then prepare a worksheet. You will be graded exclusively on the worksheet. With that, why don't I jump over to a demonstration worksheet so you can see some of the techniques. Now, first of all of your parameters should probably go in a separate worksheet. You can see that this is my solution worksheet, and I won't give you the solutions, obviously, but you can see that I put my information in a separate worksheet for the parameters. And there's some other tabs too. Now, your choice of tabs and names of tabs will differ most likely, because to be honest, I wasn't super happy with the model that I created, and my hope is that you'll create something that's even better. So first off, you probably want your parameters in a separate tab. You're going to have to be able to change all your key parameters in one and only one location. So remember when I gave you some of your parameters, for example, I said, here's your benefits overhead rate, or here's your changes in volume. You should set up your worksheet so that wherever you're referring to the benefits rate, it should be referring to the one and only one location. The reason is, as part of your grade, I am going to go in and change the parameters, and I'll know what the new answers are once I change a parameter. If your answers don't change accordingly, then you will have made a mistake somewhere along the way. In other words, you will have had the actual value, in other words, 0.33, and you wouldn't have a cell reference that came back to the original place. Now moving back to the worksheet, as I said, you probably want a few tabs. One of the reasons you want several tabs is it's a bit like mixing apples and oranges if you don't. If you try to combine all the different tasks that you're doing, constructing volumes and volume growth, extrapolating from volume growth into staffing levels, and then from the staffing levels up to the salary costs. If you try and do it all in one worksheet, it's going to get pretty complex and messy. So sometimes it's a little bit easier to break a large task into smaller pieces. That's why I recommend doing several tabs. In addition to tabs, you can also use footnotes liberally. And when I say that, I mean sometimes you'll want your core calculations. Here, I can even show you the cash flow statement. See, your core calculations go up here, but for something simple like overhead, you might have a little asterisk over here in a notes column, and then down below you'll have a notes area, which would show the starting overhead rate, and then your percentage annual increase, so that if I was reading this, I would see the changes over time, and I would see a little asterisk there, and down below in a notes section it would explain to me what happened. The reason the footnotes or separate tabs is helpful is you want the main sheet to flow. In other words, you want to be able to look at this and make sense of it, but if I have a question on it, I can say, oh, okay, I can go down there, or I can go to a separate tab, and I can see how they came up with the numbers that go into that line. Another very important part about your spreadsheet is it should be easy for someone else to follow. You should label everything. You can notice that I'm kind of big on labeling. You should label everything so that it's pretty clear what it is. Where you need some instructions or a little comment, notice that I have some instructions, and here and there I even have little comments. That's more for you to learn how to use this, but your worksheet, it should be easy for somebody else to pick up and understand. Now, part of your grade is based on the ability of someone else to pick up your work and understand what you're doing. Now, we might actually use blind reviews, in other words, they won't know your name, of your actual classmates to look at your work. So make sure that this is easy for somebody else to pick up and understand, because part of your grade will be based on that. Another very important part of this is that your work must be unique. Don't compare notes with any other students. Now, there's no single perfect answer to this. As I indicated, I wasn't even crazy about my own, the way that I did it. There's no single perfect answer. So if your work looks like somebody else's, it will be obvious that you're copying, and you can both fail, along with citizenship penalties. This exercise is a lot like asking for a picture of a flower. You'll all do a slight variation, but they're all going to be kind of unique and different in their own way. It's going to be obvious if you copied. Don't even share your worksheet with another student. I've had many situations where one student kindly shared their work with another student, not realizing that the other student was blatantly ripping off their work. And in those situations, I don't play judge and jury. I can't guess who cheated from whom, so you both get the penalty. So best answer, don't even show your work to somebody else. You're supposed to start this project with a blank spreadsheet, a blank piece of paper, and then build it from the ground up. So that's what I recommend. Don't even share your work with someone else. And in this webinar, I'm going to show you the basics of the calculations you're going to need. So you're given that as well. So there's really no need. And I give you the answers. So there's no need to look at somebody else's work. This is about making a spreadsheet that's easy for somebody else to pick up with. I'll walk through the logic of some of the key calculations that you're going to have to do. Now, first is the volume. All of this information you're already given. Now, the one thing I did want to explain here is, there we go, the first volume one. You're given the volume, the number of services that you're going to do each, in the beginning base period, how much you're doing this year, and you're given these RVUs. For those of you who don't know, RVU stands for relative value unit. It's just a relative measure of complexity. So a 1.1 is simpler than a 1.3, and it's a lot simpler than a 1.5. These kind of indicate how much effort or trouble a given procedure is worth. So this service is fairly simple. This one is a lot more complex. So if you saw one service with a 1 and another service with a 2 for RVUs, you would say that the 2 is twice as hard as the 1. And your payment tends to be pegged to your RVUs. Which is one of the reasons we compute RVUs, the total RVUs. Then that's just done by multiplying, and here I'll just show you each formula as we go along. That's just done by multiplying the number of services times the RVUs. Escape that. So I get these, that's my total RVUs per service, and then here I just sum these across to get my total RVUs. Your staff staff minutes per service is given for a given job. How many of this position or this job? How many of this job minutes go into this service and this service? And I can see job AA. They're probably an administrator because you can see that they don't work directly. It doesn't seem like they don't do anything directly for any given service, which is not uncommon. Your boss doesn't get their hands dirty. And you can see that here, this person is using 11 minutes for this service, this person is using 12 minutes for this service, and so forth. But this is all given. Next, we're going to build up our volume estimates, our total full-time equivalents, as you can tell, based on these two bits of information. Basically, are the volume of services and the amount of time per service. Now, note that we're just actually computing the variable FTEs per service. So as a matter of fact, I will add that to the heading right now. Variable FTEs per service. And we'll see what that is in a second. Basically, what you have is you know that you're doing this many services of this type of service, this many and this many. And you know for this person, for job B, let's look at B. For job B, they spent 11 minutes for each one of those 6,000. They spent 12 minutes for each one of these 7,000 and so forth. So we can kind of construct an estimate of total minutes. And let's do that just as a little interim step. So total minutes. So we'll have 11 minutes per service times, how many times do we do that service? 6,000 times. So 66,000 minutes and so forth. So we go out there and we have all the minutes that this person spends, and we can even sum that up. And that comes to how many minutes? 3,800 minutes. So given that many minutes, how does that equate to full-time equivalents? So I just saw a mistake down here. Let me fix this too. Sum up here. There we go. Now, how do we get from that, which we know is the total minutes for this person, for person B, how do we get to that to number of full-time equivalents? Now, to do that, and this little note here is telling you that, you're going to have to tell me, and give me a footnote or something. You have to spell everything out because you have to make this so that it's easy to read. Now, I'll just kind of show you, if I just take 8 hours a day times, I happen to know, 60 minutes per hour times 8 hours per day times 250 work days in a year. You get 120. So I could say there's 120,000 minutes per year per person. So if I take the 380, they are divided by that 120, I get that 317, which is exactly how you got that number. So that's where that number comes from. Give me a footnote or something that tells me how you got that 120. And you can be different. You can say, now I base it on 250 work days a year, which is based on 50 weeks a year. I give them the 2 weeks off of vacation. You might be a mean boss and not give any vacation, in which case you'd have 52 weeks a year, or you'd have, more vacation or something like that. But you figure out, how many work hours there are in the average day, for a regular full-time person, how many days per week, and so forth. So you figure all that out and give me that in a footnote. You'll come up with a number something like that, and that's how you get that 3.17. So that was the key calculation number one. Next, you're getting down into your staffing area. Now you're going to take some of the information we already have. Here, you were given the annual salaries and the FTEs. Remember, I told you were given that information somewhere, somewhere in your assignment itself, you're given this information. This is the fixed FTEs. Now, I think I mentioned it earlier. Your fixed FTEs, this is a level like your manager. You need one entire manager regardless of volume level. So for the manager, you just need one whole one. You don't need more based on volume or less based on volume. Here's another one. Here, in this case, we had a third, or about a third, 30%. That might be a doctor who takes 1 day a week to oversee billing. In which case, that day is spent whether you're billing for lots of patients or just a few patients, the doctor still has to spend the day looking over, balancing the checkbook and things like that, because a lot of things, in terms of balancing your accounts receivable, for example, it's not so much a function of volume as it is just going through, and it takes a while to do that. So that's what we call the fixed portion right there. Now, we already computed our variable portions above. I showed you how to compute that variable right there. So I take the number of variable FTEs and the number of fixed FTEs, and I add them together to get my total FTEs. So you can see that formula is just that plus that. Nothing exciting there. I have a salary and benefits rate. Now this is where I'll probably need another footnote. You can see I even had a little footnote there for my own notes. But this is going to be, now I did something you should never do. See, I have the actual value, 1.133. You should have 1 plus, and somewhere down on the bottom of the sheet or in the parameters tab, you have that 33%, which is your overhead rate. So whatever your overhead rate is, you should have 1 plus that. So in other words, don't have the actual value, but have a formula that refers to a cell. So in other words, let's say I had a footnote down there with 0.33. This would be times 1 plus there, close that out. So that's what it should look like. Same number, but it should be more like a formula like so. But I just wanted to show you how not to do it and then how you would do it. So, and the total cost is simply your number of FTEs times your total salary plus benefit cost right there. And I add that down to get my total costs for labor, basically. Now, because things change over time and you're trying to build a fairly robust model, your model is going to have to look at changes over time. There will be changes both in volume, right here, and that will vary by year for what it's worth too, so it's going to change by volume, and your salary levels are going to change too. For example, you might say, well, our volume is going to go up 1%, but we're going to have to pay people 3% more because, let's say because they're demanding more, or something like that. They don't always go up together. For example, in a down economy, there might be no salary increases, but your volume keeps going up. Your model will be flexible to handle both of those things. Also note that this was just for year 1. This will happen again in your model. You're given parameters that say that this, where is it? That this will happen right there, you can see it. This is going to happen at different rates over the years. So for year 1, however, we noted our values right there. Here's information that we were given from our base here. So let's look at the two things that are going to change in here. Most of the spreadsheet's most of this little part of the table would work the same way it did above. However, here, let's look on the left too, and I'll show you what's happening. Here, it's coming from your base year, annual salary, there, multiplied times 1 plus, remember that 1 plus the rate of change. So it'll equate to a 3% increase. So if you look at the value, it goes from 6,000 to 6180, which is a 1% increase. Excuse me, a 3% increase, right? Excuse me, from there to there to get to that. I'll show you that formula one more time. It's just prior year, you always start with the prior year, times 1 plus the rate of increase in your salaries. Rate of increase there to get that. And that formula is just as easy. You start with last year's salary for job B, multiply by the same increase. Here we're saying all salaries change at the same rate. So you get that. So that was the one thing you had to change. This staff level is the same as you were given. And here we're also going to see some inflation. This was a little bit of a trick. What we do is we said, well, since last year we had this many FTEs based on volume. Remember, we know our volume's increasing, and since the relationship between volume and staff level is linear, just to show you that, remember, it says linear because the staff minutes per service was always the same regardless of how many services, so we can say it's linear. So down here, when we're computing our increase in staffing, appears that I made a mistake there. When we're figuring out our increase in staffing, there we go. We're saying it's prior year staffing times 1 plus this increase in volume this time, right there. So we do that formula twice to get our new volume levels, to get our new staffing levels. So you've got your same mechanics, fixed FTEs plus variable FTEs to get your total FTEs right here. But see, it went from 3.4 to 3.47 to 3.5. So we have more FTEs, and we're increasing that FTEs. We're multiplying that by our salary, which also was inflated. Your total cost is still equal to your salaries times your FTEs. See that? So it's my number of FTEs times my salary. But this is inflated, and the salary level is inflated because that's inflated. Okay? To get our total salary expense for year 2. So between the increase in volume, 1%, and an increase in salary and benefit levels, 3%, our total salary expenses went from 3,100 to 321. Notice you could not have added that up. Don't get cute. It's not, oh look, 1%, 3%. It's not a 4% increase from here to here. That's not how it works. You've got to work through the mechanics or this won't work. And you'll repeat this exercise for years 2 through 3 and 4 as well. Notice that your prior year in year 2 is going to be year 1, not the base year up here. And prior year in year 3 will be year 2, and so forth. Now, moving on, we've gotten by most of the hard stuff. The revenue on your worksheet is tied to a payment per relative value unit, which you're given as a parameter. So we computed total RVUs, which from information that was given, that's from somewhere up here. See, there was our total RVUs, 4,300. And you were given the payment per RVU, so you just multiply, just one times the other, and that's my total payment, my total revenue right there. So that's how to do that for the base year. Pretty simple. For the second year, 2 things change. We know that we get more payment per RVU, and we know that our total RVUs were changing as well. That's not the change in RVU, that's just change in volume. But the change in volume directly impacts the change in RVUs. So we know that we had an increase in volume. Let me make that parameter the same as we had up here too. Where's our increase in volume? I know we had it somewhere. Staffing. There it was. Our increase in volume was 1%. So there we go. Let's make that a 1%. And our change in payment per RVU is one of your parameters, and I forget what that is. But we'll just say that that was 4%. 04. Now all the math, I'm showing you the formulas anyway, so don't worry about the actual numbers. You can say here, what I had is last year, this was my total RVUs, which we had from above. That was the number from right up here, right there. And we had our percentage increase, which was given, 1% increase. So our total RVUs increased from there to there in the second year. And our payment per RVU, which we were given as our base year as parameter, and it increased by that. So it's going to be 1 plus the increase times the original. So that's my new number of RVUs, my new payment. Again, I just multiply through to get my new revenue. At this point, I've worked through most all of the mechanics that go into this cash flow statement. We've got the revenue, salaries. Overhead is fairly simple. You're given a baseline overhead and an annual increase percent. So that's something, as I noted earlier, you could probably just put in a footnote. Calculation of net profit is just revenue minus salaries minus overhead to get that, and you can see the actual number there. So when you're trying to balance, you'll know if you got it right or not. And your present value, well, you know how to do that now anyway. You were given a discount rate as well, somewhere in your parameters, right there. So I discount each one of these future years, right along there, to their present value using that discount rate, and then I total them up. So this is this is the numbers in your final worksheet. Hopefully your final worksheet will be better looking than that, and as will your explanation of how to get from point A to point B. That's the project. Good luck.